All right, all right. Welcome, welcome, welcome. What's going on, everybody? Super excited to be with y'all once again for another Sunday Market Outlook. It is the beginning of August, already a brand new month, guys. Um, Super grateful to be back to almost like completely full health. I've been pretty under the weather for the last several days. So I've been a little bit quiet as far as just social media, the chats, everything. Just trying to recoup as quickly as possible. So feeling a lot better now. Ready for a brand new week. I see we got Monkey Man in the chat. What's good? Joseph, Mai, Paula, Noemi, Raquel, what's up? Yes, definitely feeling a lot better for sure, for sure, for sure. All right, guys. So yeah, let's dive straight into it. We got a lot of exciting stuff to look at as far as NAS specifically, with how we ended last week. All right, so let's get straight into it, guys, as we continue to promote. Actually, let me send this link out to one more broadcast channel here before we go ahead and get things rolling. All right, let's see. Here we go, here we go. It's not copying. Oh, that's why. All right, hold on. There we go. All right, cool. Marianne with the $2. Shout out to Marianne. I wonder if that $2 came out of my own bank account. I wonder. All right, let's get it. Let's get it. Lewis, what's up? Aaron, what's good? All right, guys, let's get straight into it. Alrighty, so just kind of recapping really quickly a little bit of last week. If you guys recall, we just came off of FOMC on Wednesday, unemployment claims Thursday, and then Friday we had NFP. So NFP Friday was definitely big as well. But really, man, where everything kicked off was post FOMC heading into Thursday for unemployment claims. We saw a massive flash crash happen across the board on the indices, but definitely on NASDAQ, where I'm mostly keeping my focus at. So yeah, if we look at that, we can see that basically what we've built up in price action from July 8th all the way up until um yeah, basically a month. So like a whole month of price action from the 8th to about the 4th, 1st. Yeah, basically 3 weeks. 3 weeks. Let's not say a month. It's a little bit less than that. Well, it's a little bit light. That's better. All right. Um, so yeah, we've had a price building up slow. Well, I would say slowly, but like incrementally, just creating higher highs across the board throughout July. And to start off August, we've just seen a complete dump of price, and that's very, very typical of Nas every once in a while. We do like to see with the indices when we have these drops, they're usually very fast, and then the climbs are a little bit more incremental. That's why you'll hear phrases like "bulls take the stairs" and "the bears jump out the window." This is one of those type of scenarios of why that phrase exists. Um, it's kind of annoying a little bit that these really nice drops happen when I was just like super out of it mentally. Um, Especially like Friday and Thursday specifically, man. Like those were the days where I felt like the worst. And it was like the two craziest drops we've seen in the markets in like a while. But it is what it is. I always tell people opportunities in the market, thank God are very abundant. So never FOMO on this side. We always want to, understand that we have another shot every single day that we're able to trade. All right. So we're gonna recap a little bit of how we got to where we're at here on NAS and what I see for, this next week coming up and whatnot. Of course, if you guys have any questions, you guys can drop them in the chats. But yeah, pretty simple. For those that are part of Akashex, you guys know I teach my signature strategy on there specifically for NAS, and a big part of what I do is understanding manipulation in the markets, and news is just something that's gonna accelerate the manipulation or all the other concepts that I use. It just kind of turns up the speed, right, of those things taking place. And the reason why I bring that up is because if we look at FOMC, so FOMC was this day on Wednesday, and we can see that basically around 2 p.m. So this is the 2 p.m. start of FOMC, basically until the rest of the day was this window here, right? So if we look at this on a smaller time frame, we can see that we basically consolidated all the way leading up into FOMC, just kind of building up liquidity on both sides of the market, as I've mentioned before. To everybody that's part of Akashex, which is our private mentorship program, um, Monday, Tuesday, I expected price to kind of sit around a bit, which we did. Price sat around typically before big news comes in, building a lot of money on both sides of the market. And then once FOMC came in, we saw that, everybody got liquidated, everybody ended up getting moved around. So we started off with a nice little spike to the upside. Then we had the big massive drop. And then after that, we had the massive recovery to end the day. So basically, fake out to the upside, then a big drop to the downside. Obviously, everybody at that point is thinking this is the actual move. And then towards the end of the trading day, we see price completely recover and make crazy new highs. So again, everybody that basically was in this consolidation here just got shook out of the markets with FOMC. So again, the market will always do it in its unique way during whatever conditions were around at that time, but the idea is the same. You're usually going to have consolidation or a sideways market leading up into major news. And then once the news comes in, you're going to see basically both sides of the market get ran. And yeah, that's when we can start to play off the aftermath. So usually like for FOMC, I like to trade afterwards, like either an hour or two after, but really like the next day, because I know that FOMC usually generates a really big move, and then the next day is going to kind of play off of whatever happened there. So one thing I mentioned to everybody after FOMC was we had left behind a massive amount of basically like fair value gaps and imbalances from that move towards the end of the session. So we see like these really big pushes in price, especially this candle right here, right? And that's around towards market close. So this is around 4 p.m. Market closes an hour later. And then we step into the next trading day during Asian range and then a little bit of London session up here, right? So FOMC comes, again, we shake everybody out the market. We end up closing higher. Asia kind of keeps pushing that narrative. And then London is where we finally get like the peak, right? Where price has basically finally run out of steam. This is something that I kind of let everybody know through the Telegram to expect. So if we jump over to Telegram here, we're going to see if we scroll up a little bit. So this was Thursday. All right. So this is the end of Wednesday heading into Thursday. Now, the longer term projection off of when we filled that imbalance obviously didn't end up playing out, but the initial drop is what I was first looking for, which was post FOMC, we're gonna end up seeing price kind of stop out at some point and start to come back to fill in that imbalance. And so that was that initial drop that, at least to fill this in first, we were expecting. And then once we fill in that imbalance, my thought process was, well, based off of market structure, we can maybe expect price to sit into this imbalance and then maybe make some new highs. that second half of it, obviously, we don't see that continuing. But the initial real nice move was just getting back into this imbalance. And that was really like the main first trade or first idea that we had. Again, after FOMC was just to get back into this really big gap that was left behind. And so usually with my models that I teach for trading NASDAQ, we want to wait for Asian range to form. And then basically we start finding our trade ideas around there. So there was definitely reversal models that were available here, breakout models available here to take us down into this area. Those models or those strategies that I'm referring to, I do teach them pretty much only for the private mentorship program. On the Sunday market outlooks, I usually just give you guys an idea of where I expect markets to go in general and recap some stuff. But again, definitely my main value and sauce is going to be by becoming a member of Akashics. So I know some of you guys here already are, and you kind of know the deal. And if you're not involved, then I highly recommend that you do take advantage of it because again, on these Telegram chats, we kind of give you guys insight ahead of time of what we're expecting. This was also another projection beforehand. We saw the aftermath of that kind of playing into that gap that we were talking about. So it's obviously worth it. We have some testimonials from some of the team off of those sell-offs that we had, as we can see here. So yeah, that was kind of the start of what ended up being a massive move that got continued basically heading into Friday. So once we filled in that big gap, price tried to, push higher from there, but we saw price continue to fail and basically just cancel out the entire move from FOMC. So if we look at the FOMC lows and highs, basically, this was the low of FOMC. And then that kind of trickled into the London session the next day. And really from there, like the lows from FOMC got pushed through here. And yeah, Friday was NFP. And NFP was pretty simple. We started seeing the NFP moves happen here, but everything really starts off the breakout out of Asia here. So anybody that traded London session on Friday just basically caught a continuation of the massive sell-off from all the way up here. So it's crazy because, I always look back and I'm like, man, obviously I didn't catch this personally, but this is a scenario that according to like my models and everything are possible if I were to literally just like hold the trade forever. Um, there was a potential trade here off of the reversal model that I teach here that, ran for more than a 4-to-1, which is what I usually target. And off that move, my goodness, since then we've had like just a complete melt off of there. So when you have the right model on the right day, obviously that's not even assume that we're gonna hold the trade that long, but even just having the right model on the right day, as far as the strategy that I teach, you can get very precise entries that run for much more than your risk, with the right market conditions. So that's what we look to continue to keep up for the rest of August now. Catching a really big move like this again probably won't happen soon, but let's see. For me, just kind of, going into what I expect for us to see now is price has already showed us a willingness to, drop very aggressively. And I think that we're not quite done dropping off just yet. We're really sitting around a lot of liquidity when it comes to all of these lows here. Okay. So for a while, I was talking about 22,800, if you guys recall, and I'll go back into the chats as well and kind of show you that. But this demand zone right here, we ended up running through it finally on Friday. But this was a zone that I had my eye on for a while, but really more since like the middle of the month. So once we were like by July 17th, 18th, 20th is really where I had my main focus on potentially getting into this area again. We ended up continuing higher for a couple more weeks. But this was always a pending area for me to kind of get back into because this was a nice little wick that kind of manipulated to the downside that ended up putting up new highs in the market. So I always wait for price to always kind of get back to areas of manipulation at some point. Again, if we kind of go back into the Telegram here a little bit further, um, let's see where we dropped it in here. July 25th. 21st. So we caught a lot of like trades in between, but that 22,800 area was definitely something that I had my eye on for a while. I might have passed it. Yeah, I think I passed it. Um, where did I put that? 2300s. Okay, here we go. So we had that 22,800 level since what day was this? July 23rd. So July 23rd, started looking at that level. And yeah, it took a while for us to finally get down to that level. But now that we kind of ran through it, we start to reevaluate now where we can go. So again, 22,800 was a level where if we were going to come down, that would be my first area to look at. We've already hit that. So now I start looking at all of the relative like lows that are close to where we're at, right? So, we had these lows that kind of already got hit. We still got these lows intact, these lows intact. So for the most part, well, let me just draw all of these, right? So we have these lows next. Got this one here. And then basically you got these lows right here as well. So just looking at all the lows that have kind of held price up during the whole like month and a half that we've been looking at price, we saw price already drop off immensely, but we haven't really hit all of this liquidity here. And if we're this close, it's like a very high probability that we're gonna end up just continuing to run through those. So these lows are gonna be like the next kind of areas to observe, right? So we're gonna leave these marked up here. And then as we end up breaking below those lows, then we'll start to remove these lines and just kind of not worry about them. But for the most part, I do highly expect price to continue to drop off there. It doesn't necessarily mean that it's gonna happen like right away. It really just depends how we open up now on Sunday. The market's gonna open up now for the indices in about the next 2 hours and change. For all I know, we end up gapping down like crazy, and we probably end up grabbing that liquidity off the rip already. This might end up actually pushing higher. It just depends, like we're basically going to be battling now between grabbing this liquidity and then also rebalancing some of, these gaps that were formed from this big drop. And both of those things are going to happen. It's just a matter of the order in which it happens. One thing that is going to stand out to me real quick as well is on the daily time frame, we have a big fair value gap below that we can see at around 22,100, 22,200 around there. So if you guys recall, like we had this big daily fair value gap that formed here back in towards the end of June. It's like June 24th. So that fair value gap was something that, I was paying attention to a lot more closely when we were in June, early July. But as I've said before, like fair value gaps don't need to necessarily rebalance themselves right away, especially when you have like a daily time frame. That can always be revisited like weeks later or even months later. So yeah, this was the end of June. We're already at the beginning of August. So it's been about like a month and a half, maybe a little bit less, right? So from this fair value gap that we had on the daily, we've kind of incrementally just trended upwards. Now we've had these big flash crashes these last couple of days. So again, for me, maybe we get like a rebalancing a little bit here, and then we just continue to flash crash through all of this liquidity, and then tapping into this fair value gap. That's what I think right now from a higher time frame perspective we could actually expect. Once we tap into that, if and when we tap into that fair value gap, then we will reassess again, like what NAS is trying to do. If it's trying to keep going or not, because we also have this other fair value gap down here that's still not fully taken care of either. So, that's pending, that's to come. We don't want to go that far back just because it's pretty far away. Okay. So we just want to focus on what we have very close by right now, excuse me, in price. And then we can also kind of look a little bit further ahead as a potential scenario down the line. But for now, I still think that we're very close to this liquidity. We should be grabbing all of these lows. So I still expect NAS to drop a little bit more. Now, we'll see how the market reacts to open, but it wouldn't surprise me if we come up just a bit first and then we drop. And then we can even maybe expect us to get down all the way to 22,150, 22,100, something like that. So I'm still very bearish just playing off of this flash crash that we've kind of had. I don't think it's done quite yet. All right. So let me check the chat, see what's up with you guys here. But that's kind of the MO for now. So bearish on NAS overall. All right, let's see what's up here. Caught a perfect long position with FOMC after tapping into a 4-hour FVG. Nice. Saeed, what's up, bro? Edgar, what's up? Yeah, so if you caught some, I'm guessing you're talking about catching some buys off of that on FOMC, so nice. But yeah, guys, that's pretty much my analysis for NAS. Again, we have very close liquidity buy here, around 22,600. So I wouldn't even be surprised if at market open we end up already dropping into that. So let's see. We still have to wait for market to open to really get a better idea. But at the end of the day, like, it just comes down to rebalancing price and or seeking liquidity. It's always going to be those two things for me for now and forever. The markets have shown that that's really all it gravitates towards. So if you just keep it that simple, you have less stuff to think about, worry about, try to analyze, So I just look at, where are the fair value gaps and where's the liquidity. And if you know where those things are located, then you can expect for price to go to those two things at different times. And we just see which one makes sense given where we're at. So for now, for me, yes, we have a lot of fair value gaps that were left behind from this big drop. I do think that we'll eventually get back up in there. But for now, I just see the more close by objective and something that seems more reachable right now is to just continue seeking all of this liquidity here, which means that we should see NAS continue to drop more. So we'll probably even hit 22,000 as a psychological number. Let's see. And then we'll kind of take it from there. Because once we get to 22K, that's going to be very, very interesting if price is really trying to really sell off hard or if we're just going to kind of pump the brakes at around 22,000 and then recover. So let's see. All right. Hey, what's up, Kent? Willie, what's up? Other than that, I haven't really looked at other markets too much, especially the last couple of days where I've been kind of like out of it. Um, Tesla's just been, I mean, Peloton's just been hanging around. It's like one of my like high risk stock plays that I've just been leaving on the back burner, which hasn't really done much in weeks. Crypto obviously was a hot topic. We started making new all-time highs the last couple of weeks. We've seen other cryptos kind of following suit, of course. XRP got a lot of clout. Honestly, like, look, I've been telling you guys about $1 XRP, and I still hold to that. We just liquidity grabbed the previous all-time high here, and we're getting some rejections. Obviously, if we start moving into like the $4 plus range, it's gonna kind of hurt, my ego a little bit. But man, I'm sorry, bro. Like I'm very convinced that we will see XRP at $1 again. And then once we get there, I'm gonna dump some money in there and take us at least to 4. That hasn't changed at all as far as like my approach for XRP. Um, I still like Solana to get down to under 60, $50, and then I'll be getting some there. Then I have my other like altcoin stuff here that's kind of like dead in the water right now. I've been in drawdown on ApeCoin and Filecoin for a while. So I just have that money just sitting there in drawdown like whatever for now. Um, yeah, that's really it, man. That's really it. Cool. Um, wow, that's a really strong weekly candle too. And let me tell you, like Nas has some interesting like weekly levels to pay attention to because look, even here on the weekly, you can see the big fair value gap here, another one here. And then technically, like you can even see this is the manipulation wick on the weekly time frame for Nas that kind of took all that liquidity from April. And since then, we've obviously skyrocketed to new all-time highs. But usually, like on smaller time frames, especially, um, usually when you have these manipulation areas like this that kind of, grabs liquidity and shifts the market, price tends to usually revisit those manipulation areas and then move. And man, like for us to get down to there, that's a big drop. Let me tell you, like for us to get that again, we're gonna have to hear a lot of like tariff talks or like World War III talks or something like that. But it is very possible from like a technical analysis standpoint on the higher time frames, like the weekly. This is, an area on Nas that you can see this wick has not really been revisited ever since it was created. And again, if this was like a 5 minute time frame, a 15-minute time frame, I would really look at this area as like an area that, should be revisited for sure. It's just I hesitate saying it so easily because this is a weekly time frame on the Nasdaq and this is a drop. Put it this way, it would be a drop of 27% to get there. That's a very strong drop. Like for reference, the last drop that we had from all-time highs to here was about 27% as well. And we all heard like recession talks and all type of stuff during that time from like April, if you guys recall, February to April with all the tariff news and all that stuff. So, I know there's like that whole lingering thing of like Israel and Palestine, and then also America with Russia right now with the submarines and the nukes and all that stuff. So, you never know. Like that could be some catalysts to watch out to take price potentially all the way back down to these levels again. And this is like macro scale. Like this is like looking at weeks and potentially months of price action. So, for now I'm pretty leaning heavily into a bearish bias for Nas. At minimum until we get onto like 22,500, 22,000 around there, somewhere in this area. And then we'll see from there. All right. So yeah, guys, that's pretty much it. Wow, it feels like we've been on here longer than 30 minutes. Cool. Well, yeah, so other than that, guys, for those that are not part of Akashx just yet, this is our schedule for everything that I do personally when it comes to like sessions and everything like that. So I do the YouTube lives on Sundays. That way, a little bit like everybody can basically tap in, whether you're a paid member or not, just to kind of get a little bit of insight from me. Mondays, we do our Spanish sessions at 11 a.m. Eastern. And then Tuesday, Wednesday, Thursdays, I do my sessions in English. So usually we either live trade on there or at minimum, I cover any trade alerts or signals that I end up sending out to the paid members. We'll recap setups, look at future setups for the rest of the day. just all that, answering questions, going over the strategy. Like we really try to cover a lot on there. So this is pretty much the repertoire that I have right now for the schedule. So yeah, I'm gonna send that out so people can share that as well. But yeah, man, other than that, I definitely want to ramp up something different, something fresh moving into like these next couple of months. Because, I think over time, we kind of like go through phases where we're like in the motions and like shit, like things are cool, but like you always want to try to reinvent yourself. You always want to try to like, keep things fresh. So that's definitely something I want to kind of focus on for the next couple months. So yeah, man, I really want to start putting a lot more emphasis on the members, like seeing your guys' testimonials, withdrawals, passing phases. Like I have a lot of cool documented results of members, but like I want to be able to give them a little bit more platform and a voice, right? So that's something exciting that I really wanted to kind of implement for a while. So whether it's through the Telegram channel, social media, just try to stay in the loop. If you're somebody that does trade my strategy or plugs into my stuff as much as possible, um, again, to just get recognized and to be able to have like, yeah, just more of a voice and just showing the community that it's more of like a movement, right? I don't want it to really just be like the me show, to be quite honest. I kind of like it for members to be able to like, you know, like flex a little bit. You know what I'm saying? I think that's what it's about. So definitely be on the lookout for that type of stuff, guys. But other than that, for the market outlook, that's a wrap. Again, we don't have to overanalyze stuff. We kind of have a game plan now for now. So let's see how market opens up, and then we'll take it from there. But yeah, guys, appreciate y'all. I will see you guys if you are a paid member through the chats and the live sessions throughout the week. And yeah, if you haven't enrolled yet, guys, definitely take advantage ASAP to lock in. Obviously, the most value and the most results you're going to get is always from actually being a part of the community. So, highly encourage that you guys get locked in. And if not, I will see you guys next Sunday for our next Outlook call. But yeah, guys, with that said, we're going to wrap it up. Hope you have an amazing rest of your weekend. I'll see you guys throughout the week. And as always, let's run it up.